Folks, it is Fed Day, and boy, aren't we so lucky to interview the one and only Anna Kelly on Fed Day. We get to understand what she sees going on. We get to kind of guess, interpret, put it together what the Fed may be saying, and more importantly, what the impact will be on you and I. Anna, it's Fed Day.
It is. It's like deja vu. Who would have thought we would have kept having Fed Day talks for a year and a half?
Yeah, yeah, no
Not
kidding.
me. I
Oh,
saw inflation, but not this many. But I think today's going to be kind of a big
mhm.
nothing burger, kind of like the last one. I think they're going to come out and say, inflation has some good signs that it's coming down. Probably not coming down enough. We got a little higher than expected, number Monday. And I think they're going to say we're going to pause and let the lag effects take through to the economy. We don't see a recession. We're not talking about rate cuts yet because they don't
Yep,
want the
yep.
markets to rally any more than they already have. And I think they're going to try to be, steady runs the
Mhm.
race. We're not even talking rate cuts and
Yeah.
not give us much to look at, other than obviously there will be a new dot plot. And that
Mhm.
always tells us, at least independently, what they're kind of seeing for rate cuts and whether it's better sooner than what it was the last time. So that's kind of what I'm looking for. I assume the Fed speaks much of the same, but I'm interested to see that new dot plot.
Yeah, so we'll talk about the dot plot in episode 2 because there's a lot of stuff in there that could be
Great.
telling. So I think there are really 3 things that I will look for outside of the dot plot, which again will be video number 2. One is, will they or won't they increase rates? I think we're all on the same page here. They're doing nothing, right? The
Right.
pause, the 3rd month in a row of a pause. Um, then that goes to the statement. Do you think the statement will allude to possibly being at the terminal rate? Or will they still work in the language we're data dependent and blah, 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 and one more might be coming? Do they think they do anything around the statement on terminal rate?
I would be surprised for them to say we're done. I really would. And kind
Me
of
too.
coming back to, they don't want to repeat Arthur Burns. They want to, Powell wants to be known as Volcker. He doesn't want a chance saying we're done and inflation rise up again. Because while there are a lot of numbers that are showing we're entering some deflation, right?
Mhm.
Inflation numbers are starting to come down.
Yep.
Oil prices are down about
Yeah.
half from where they were at the peak. And that is also helping keep some of these prices down. If oil were to, rise up again, conflict in the Middle East grows, etc., that could alone spark, more inflation again, because those energy prices will then trickle through the rest of the economy, both goods and services. And so, I think that while they might be cautious, I would be surprised if they actually said we're at the terminal rate. I think they're going to say we still see some potential inflationary issues. We want to wait till we're meaningfully down
Mm.
close to 2%, which has been the mantra they've been beating, that drum for a year and a half or more at this point. And so I would be really surprised if they said we're at the terminal rate. I think they're
Yeah.
gonna say, we're holding tight, but we're watching, and the data will make our decisions for the next quarter.
I think you're absolutely right across the board on all of that. Um,
We'll see.
the next thing to talk about in this statement will be, um, do they talk recession at all? Right? Do they talk unemployment? Because when I look at the statement on that is the collection of 18 voices. It's probably some negotiation. It's the most blah statement, but there's still, pieces in there that are interesting. The only thing that might shock me in the statement is A, do they use the word terminal rate or hint that they might be done?
Mhm.
And then the other one is, do they address the market, aka the market thinks between 4 and 6 uh, rate cuts next year, right? Do they actually explicitly say something like, I don't know, the market is, being too aggressive or whatever they might, whatever Fed speak. I think that's the one wrinkle. Will the statement mention the market being early or wrong? They might put something in there like that.
Right. It's interesting. I mean, we've talked several times on the show about Fed speak, right? They say a lot of nothing, but they're putting language in there to kind of give a little bit of a hint too. And
Mhm.
the markets haven't listened to them or believed them, but they've been consistently
Yeah.
giving hints about what they're going to do and proving the market wrong that they're actually going to do it. And it's interesting. I just listened to, it is 11 o'clock Eastern on Wednesday. I just listened to an interview live with Janet Yellen on CNBC about 10 o'clock. And she mentioned, she was asked about a recession, and she said, and again, she's with the Treasury, not the Fed. She says she doesn't
Sure.
want the Fed to do their job, but we would all be dumb if we thought that they weren't coordinating and
Yeah.
everybody's kind of on the same page, right?
There's a group
So
text. There's a group
yeah,
text.
yeah, exactly. And she said, we do not see a recession. We don't. We think that the
Yeah,
economy is doing better than we thought it would be a year ago, both nationally and globally.
I
The
think that's
job
fair.
market and labor participation has been much stronger than what they anticipated. So they don't see
Fair.
meaningful unemployment rising to the point that that causes recession.
Mm,
And, beating the drum that the consumer is stronger than we thought. There's still some wage pressure, but she also said, they asked about the markets, and she said, well, we try our best to give some forward guidance,
mhm,
right? And
mhm.
they do. So in their language, they're trying to give you some hints to tell the market, here's what we're going to do, so that
Mhm.
the market doesn't go crazy one way or
Right,
at another. She said very specifically, we and the Fed do not like to surprise the markets,
right.
because when we surprise the markets, bad things can happen, and she didn't say we can lose control, but essentially they could lose
Yeah.
control for a while. And then there's all kinds of backstops and things that they have to do to rescue, the
Mhm.
markets, which she didn't say it that blatantly, but that's what she said. So, essentially, Michael, I think the Fed is going to continue to give hints to the market of what they really intend to do. I don't think Powell is playing chicken. I don't. He has
I don't
shown
either.
himself to be,
Yeah.
this is our path. This is what we're doing. Hold tight. Numbers are good. We're making progress on inflation. We don't see a recession. And we're not, because of that, maybe, we're not forecasting or even talking about rate cuts yet, because the economy is still strong and we still
Yeah.
have work to do. That's kind of
Yeah.
what I expect.
Yeah, I am by no means a Janet Yellen fan. I don't think she was a great Fed president. I don't think she's been a great Treasury secretary. But that said,
Agree. Agree.
I think how you open that, I think she's generally right. The economy is stronger today than we expected a year ago. I think that's fair. And the
Mhm.
job market is stronger today than maybe we thought a year. I think both of those are fair statements. And I'm by no means a Janet Yellen fan. What do you think?
Absolutely.
Yeah.
Absolutely. And here's the thing about Yellen. I mean, she's a modern monetary theory,
MMT. Yeah. Yeah.
advocate, just like most of the Fed presidents are, by the way. I think they've been, have a little egg on their face, if you will, because they've shown that they can't just spend a
Yeah.
perpetuity and inflation
That
is never
didn't
going to
work.
happen.
That
Right.
didn't
That's
work.
their theory. We can keep spending because we keep printing and we never have to pay off the debt and it won't cause inflation. Well, that's
Yeah.
shown to be not true. Right. So
Yep.
I don't have respect for that theory and those that follow it.
Mhm.
However, there are some things that they
Yeah.
understand better than I do and that they get right. And so, one of the things that I thought was really interesting, although Yellen said they don't see, and she talked about the Biden administration and the
Sure.
FOMC, et cetera, collectively, the government doesn't see hyperinflation or long term inflation. But while she says that on one hand, she went on to say, no deep recession, no bad inflation. The economy is fairly stable, better than we thought, and we're going to make it resilient again. And something that you and I have talked
Mm.
about, and it's the first time I've actually heard someone at the Fed say it, to my pleasant surprise, is that we have to fix now the supply side. We have strong demand. So
Ah.
we need to go back to, and the president has, legislation that we're crafting and preparing to bring back production and manufacturing and start producing again. AKA, we need to get GDP up despite the fact that there may be some inflation. And what she didn't really say about that, Michael, but I think it's important for us to think
Mhm.
about this when we're listening to the Fed, is the Fed's picture is very short term. It's,
Sure.
here's where we think we are, here's where we think we might be in the next month or quarter. And other things are more long term. So while she says we're going to bring back some things, one for national security, for supply chain issues, so that we don't have these things happen, what she didn't say is those things are also very inflationary long
Yeah.
term,
Yeah.
because it's going to take a decade to create the infrastructure, to create the jobs,
Mhm.
and to pull in enough tax revenue, which she mentioned. We have to raise taxes, we have to do it to pay for all these things that are ultimately going to make the economy more resilient, higher GDP. She just didn't say, and oh, by the way, that's going to cause higher inflation. So,
Yeah.
all that to say, when we listen to the Fed and you and I try to get real, soup to nuts, like, what does
Mhm.
this mean to me? Right?
Mhm.
Don't get too excited, regardless of what Powell says today. Because what
Yeah.
we do see is, thankfully, inflation is coming down, pretty well at this point, and there's probably more time to go. But that is still very short term. And
Yeah.
over the long term, I think we still have to prepare that over the long term, there will be higher costs of things. That includes costs of me providing housing to people, right? We provide housing to thousands of people. And I'm still going to have my costs go up, even if my interest rates come down. So we hope rates will come down. As soon as they do, if something breaks, if we do go into a recession enough for them to cut meaningfully, I'm going to refi and lock in long-term debt as long as I possibly can. But I do expect that short-term cyclically, we are having a deflationary environment. But I think long-term secular trends, longer
Yeah.
than 2 years, is still inflationary. So I don't think we're out of the woods today. We
Yeah.
might be temporarily getting out of the woods to at least be able to see the light at the end of the tunnel for a while.
Yeah, and then the last thing to talk about Fed Day, again, before we get to dot plot in number 2 is if there's any fireworks, I think it'll be in the Q&A, and I really
Yes.
expect Powell to be asked a dozen times in a dozen different ways, basically the same question. When are you cutting rates?
Yes.
Right? Because that's where the
And are
market
we in a
is.
recession? Is something going to
Yeah.
break? He
Yeah,
won't
he's gonna
answer that. But
no.
in order to cut rates, it's going to require that we're in a recession or something breaks.
Yeah, you know what? Actually, I'm starting to think there's another option. So
I
I was
actually
with
do
you.
too.
Yeah.
I actually do too. I want to hear
Yeah. So
yours and then I'll tell you mine too.
yeah, so for a long time, and I'm gonna stick to it because I don't change my guesses very often. I've been calling a Q1, Q2 recession. I
Yes.
am now looking at the structure and, it's maybe 60-40 in my opinion, recession versus skate by. But let's just assume they skate by. I still think they could cut
Yes.
because inflation is falling and they don't want to get more and more and more restrictive. So we could have
Absolutely.
rate cuts next year without a recession.
Absolutely. Yeah, we alluded to that last week when we talked as well,
Yep.
because they have said, although rates are restrictive and they may cut rates down the future, but they haven't really talked about it yet, right? Is that they want to make sure that as inflation comes down, they maintain a restrictive posture. So
Correct.
if you've got, inflation that was at 9 and your rate was 6, you're not restrictive enough, right? If you have inflation that's
No.
4 and your rates are 5, you've got a
Yeah.
1 point restriction. So if inflation is down to 3.1 and Fed funds rate is now 5.25,
Mhm.
5.75,
Mhm.
you're really restrictive, which
Yeah.
could hurt the economy more, push us
Correct.
into a deep recession, break the bond market, et
Mhm.
cetera, the banking system. And so, yes, to your point, as inflation comes down, they do need to cut rates so that it's
Yeah.
not more restrictive
Right.
than what it was actually at the current high rate given higher inflation. So
Yeah.
I absolutely believe that that will be the case, that they will bring rates down. I just think that they keep a restrictive stance
Correct.
so that the rate at which the Fed funds rate is will still be higher than the
Mhm.
inflation rate, and disincentivize some lending to continue to slow down,
Yeah.
the inflation rate without putting us into a recession or a crisis.
Yeah. The last thing that might be fireworks is, as Powell gets into his press conference and he's gotten the same question for the 8th and ninth and 10th time, I wonder if at some point he gets frustrated and just, you know, back to the old, shut the effing door, which I think happened in one of his interviews recently. He can get frustrated. So I just wonder if we may have one of those moments that will be interesting. So we'll see.
Yeah,
But
I would be surprised. I think for the
yeah,
most part, he's been fairly,
measured.
calm and collected despite many people telling him, you're wrong, you're wrong, you're wrong. I expect kind of more of the same,
Yep.
not too not dovish, but not too hawkish, just kind of
Yeah.
like lag effects are real. Give us some
Mhm.
time, be patient.
Right.
We're on the right path. And I think that's what you're going to hear today.
Totally agree. Anna, where can people find you? And we'll get into the dot plot in episode 2.
Awesome. You can find me here on your show every week. It's the only show that I do consistently every week for all of you listeners. And you can find me on social media at Anna Kelly REI Mom. And if you're interested in real estate coaching, consulting, or help with deal review, whether that's your own property or a syndication, you can find me at AnnaKellyInvesting.com.
Thank you so much.